Okay, so the agenda this morning is pretty flexible. Um, as you guys know, I kind of like to look at what we were supposed to do and see if we're going to do that. So today, this is about live tape read with me, aka Doc. Um, and then we're going to look at some drills. That's a big chunk of this. I debated back and forth which way to do this. You know, if we should be really formal about all the drills, or if we should just talk and do drills along the way. And I decided to kind of do both. So we're going to talk about tape reading and what's going on. And there's actually some interesting stuff going on right now. Look at the spreads in the NQ. You know, where any sort of size is. Basically nowhere. There's nothing above 10 here in terms of a bid or an ask. Oh, there's 11 down there, and those guys are what, 4 points, 16 ticks off the inside trade. That's crazy conditions, and you can just see it hopping around. Also known as not tradable to a lot of people, but again, if you kind of put that into context, like we've been talking about, you will find it's not quite as crazy as it looks. This is ES, but let's switch to NQ real quick for a couple of these examples. All right, so that's one thing. Drills, the reason I'm going to do that way instead of just organized 1, 2, 3, 4, 5, show you a bunch of drills, is because drills are about improving a specific skill for you, and this is different for everybody. And it's also going to be different for you along the way. There's going to be drills you're going to do at certain points that will make sense, and then other times you'll want to do different ones. And so I think that's a better way to go about this. So what I'm going to do is talk more about order flow and just what we're seeing on the domes and what that looks like on the charts. And then when there's sort of a specific drill that comes along, I'm going to attack it. So like right now, under these conditions, it would be pretty hard to do one tick drills because you just got too much movement around the inside. You could do it, but it would be hard. Like right now, I'd probably lean right there. Let's see if that, yeah, see, that's a good example of why it doesn't work. You get filled and immediately swept because that's the only way to get filled. So even getting a tick under conditions like this or trying to do one tick drills would probably just be frustrating. It's going to go against you so badly before you know if it's working or not. So that's an example of tuning a drill to what's going on, and I'm gonna cover more of that along the way, but I really want to make that point first. So let's take those first 2 points. Number one, drills are designed to focus on a skill of one kind or another, and there's a lot of different skills involved here. So that's the purpose of doing different kinds of drills, is you're literally just practicing your skill. And you know what? Somebody asked me this, not in the workshop or TRG, a personal friend asked me this. And the question was, how much of this type of stuff is like athletic, like repetitive training? And you know, the example he gave me is he's a pretty good tennis player, and you know, so he was asking from a tennis analogy. Practicing your serves and stuff like that. And so I thought about that for a while, and there's both parallels to athletics and there's disconnects. The parallels are that if you practice anything over and over again, it gets more automatic. And one of the things here that he brought out by asking that question, so this is a really good point, is that you know, you think of athletics as being physical and you think of this as being more mental, but this is a lot more physical than you think it is. And so that was kind of my response to his question. You're training your brain with a drill to do something in a blank, you know, do something really quickly without having to think about it too much. Like there's a short here. And in doing that, there's also physical responses that you have to teach yourself, and your body has to respond properly. And you know, in my case, it's interesting because I have chronic pain from all my breaks and NRA too, which is an autoimmune disease. And I notice that a lot. Sometimes I'll be really dialed in mentally, but physically, my body just does not want to play, and I'm hurting and whatnot. And that's one of the times when I will switch from live trading to drills, because it's a really good time. Think about this for a second. When you're not feeling well and your body's not responding the way it wants to or the way you want it to, typically, a human response is, well, maybe I just don't want to trade today. But that's a really good opportunity if you look at it the other way around and say, well, if I can trade with that adversity, when I feel better, I'll just be that much better at it. So something to think about. Okay, Amy, I see what you're saying. You had problems last night too. So that must be at your end. And one suggestion, if it's audio, you might have some sort of crap running on your laptop that is sucking it out. I would make sure you remove all your porn malware. Okay. So I just want to stop on that point for a second about drills and make sure that you get that there's a lot of connection between the mind and the body and how you feel, and if you've gone through any of the workshop stuff and you've seen some of the conversation about processes, the entire left side of my process doesn't really have that much to do with trading. It's more about physically and mentally keeping sane, and so I just cannot emphasize enough how critical that is. And that balance that I was talking about last night, if you were at that session, or that you've heard me talk about before in some of the other sessions, that balance between, doing drills and playing and live trading and being in the sim, those are all different things, and they all have a different impact on your brain and your body, but they're all good for your skills. And that's really, what this is about. Perfecting is a bad word. Constantly improving your skills. Okay, so having said that, let me leave that there for a minute, and then I'm going to talk about a couple of types of drills and talk about a little bit of chart to dome stuff. And also somebody asked me about the Motleys we talk about all the time, and there's conversation about how that came about a little bit in the workshop, but I just wanted to tell you all, because this is good for everybody, new or old, Motley or not. Real quickly, the Motley story, where that comes from. Why do I call, and it's not just the workshop graduates that are Motleys, it's the people that made a commitment to improve after the workshop. That's who the Motleys are. And I named that group after a team that was at IBM in the very late 1970s and early 1980s that I was not part of, but it was legendary and I heard of it. So real quickly, my first real job, other than starting companies out of school, after I left UCLA, was to go work at IBM, and I was a sales engineer, which first they spent a couple of years training us in coding and whatnot, and then our job was basically sales, but it was a lot of engineering because it was very technical sales. Anyway, so long story short, there was a team out of Norwalk, which is like Eastern Los Angeles, and the team, one of the guys on the team was my manager when I got to IBM, a guy named Bill Kellis. And Bill and Cynthia Leverhant, who was another one of my managers, were part of a group at this Norwalk office called the Motleys. And basically, they were kind of rough and tumble, but their sales numbers were so good that the entire country, IBM had 300,000 employees at the time. Everybody knew about these guys. And it was things like, a normal sales quota for an engineer might be to sell a system a month or a system every 2 months. And these are $5 or $10 million computer systems. The Motleys were selling, one a day or one a week. And it was just mind boggling. And so they got a reputation for just being the best of the best. And a lot of times it was by being skeptical about the rules or the conventional wisdom. So because of that, I named the Motleys here after those Motleys. So for those of you, Osman, I think he's here. Yeah, we're asking in the Slack where the Motleys come from. That's where the name comes from, and I thought it was apropos because it was just a commitment to being the best of the best, and at the same time, a commitment to kind of avoiding the status quo and the regular way of doing things. They just always found more efficient, better ways to do everything, and became legendary because of that. So. Anyway, Joe, let's see. Oh gosh, basketball. I think I mentioned, you may have heard, my brother-in-law has Soul Brothers, which is a charity that gets shoes for kids that can't afford them from kids that can, and he's also the basketball coach, or one of them, at one of the private high schools in West Los Angeles, and Crossroads. And exactly, you know, some of these guys really have a lot of talent, and he makes them like do dribble drills for an hour, and they're ready to just rip his head off, but they become so much better players. And so that's a really good example. And the same thing is true in trading. So let's leave the chart to dome thing a little bit, and let's just talk about some drills. So the most obvious one you guys hear us talking about all the time is the one tick drill. Oh, thank you, Osmond. Yeah, no, this has nothing to do with Motley Fools. Motley Fools is the website, and no, it's nothing like that. A motley is a term for somebody that's kind of a raggedy person. So like Motley Teeth, you know, or a Motley Crew, the group. And, you know, they spell it C-R-U-E, but, you know, that's how the band was named too. Same story. It's also, and, you know, it was funny, the Motleys at IBM. IBM was a very buttoned down company. I mean, I had, you know, an entire wardrobe of Brooks Brothers suits, and they were identical: blue pinstripe button down shirts, white shirts, you know, red tie, wingtip shoes. You know, you didn't have to worry about what you're going to wear to work, because that's all you wore to work. And, you know, we just had a really, you know, IBM owned IT at that point. There really were no other people even in the business. IBM was legally prevented from doing a lot of things as a monopoly because there were no competitors. I mean, it was that significant in the 60s, 70s, early 80s, before the PC came along and changed everything. Anyways, that's that story. So going back to drills, the one we talk about the most is the one tick drill. And the one tick drill has a very important purpose. It's not about getting a tick. Okay, so first of all, and you can get more than one tick if you want to. And there's no fixed rules about where you put your stop. The idea of the one tick drill is to learn how to get a tick out of a market by reading the action. And that's your only objective. It doesn't matter how far it goes against you. You're just trying to get a tick, and that's it. And what you're practicing is the art of understanding getting a tick. And it has nothing to do with where your stop is. It's all about getting the tick, or more. Sometimes you do get more. So an example, as I've mentioned before, I have several trade management little bots here that for different kinds of, I'm showing them in this, in the ES dropdown. I know it's a little hard to see on this Zoom. So I have, for example, one set as a one tick automatic trade management tool. So right now, for example, I missed it. I was trying to get long right here. Okay, let's see. There we go. So that happened. That's how fast that just happened. I got long, we went a tick, and I got filled. And okay, that one didn't fill yet, so you can see it. Okay, and that one stopped out. So that's a really good example of why this is a tricky thing to manage with any kind of fixed stops or fixed exits. So let me go to something that's moving a little slower. Let's look at gold over here. So what I'm going to do, I just want to put that same setup up here on gold, because I just want you to see where it displays the stop and the target. So right now I'm going to get long right there. Hopefully I need to get filled. All right, let's get filled there. Come on. There we go. All right. So now you can see my target's one tick, and I got it. And my stop was down at like 7, I think is where I have it. I don't even remember, because I don't use that stop. Let me just see where that is real quick. The stop is really designed to be more of a catastrophic approach in this thing. And I'll explain in this particular setup, and I'll explain that in a second. Let me just look at that. Okay, yeah, for that one I'm using 6 ticks. So, but the idea is not that I get a 1 tick winner or a 6 tick loser. The idea is to find places where I have a really good shot of getting my tick and to learn where that is. So this is a good example. That stop really shouldn't be there if I was really trying to trade this. Boom, I got it. But do you see what happens? So it's a really good exercise to get in there and just get really, you know, and the right term, I'm not saying this to be amusing, although it's amusing. The right term is to get in there and be intimate with the order flow. You know, I want to really dial in and see, you know, all right, I don't want that one now. You know, let's see if we can catch a little short or catch a long. And remember, these are going to execute on a 1 tick profit if they get filled. So it might happen very fast. And they both have 6 tick stops, which is really too close for doing this under these conditions. So what I do when I do the one tick drills often when it's this choppy is I don't use the one tick ATM. I use a different one, and I'll show you that in a second. I just want to see if this gets filled here. It looks like it's going to. And let's scoot that up there. I want to see if I can catch it on one of those little thrusts down and then show how it'll immediately give me my tick, because that's just the nature of order flow, but it's got to get there first. See, trying to do it right here where it is much riskier because the inside bid and ask there is pretty solid. It's really not going anywhere. I need it to get away from there at least a couple of ticks, because that improves my odds of this working. And again, I hope this makes sense. It's not going to make sense totally in one session, but there we go. Okay, we got it. So we got filled and we got a profit, and that's how fast it happened. Okay, so that's a one tick drill. And again, there are no rules to any drills. The idea of the drills is to help you. So for the one tick drill, your objective should be to get a tick or more. And sometimes when it's choppy, I won't use my one tick ATM, I'll use my HMOMO one. And what that does is it gives me a lot more room to be discretionary once I'm in. So let's see if we can get along here. And then once it's running, I'll show you what's different. Boom. Okay, so now look, my stop's way down there and my target's way up there. This gives me some room to play around with this. So I'm long, so maybe I'll put it there, and I'll just so it executes while we're talking about it. So right now I've got a 4 tick or 1 point profit, and this is not my stop. I just don't want it confusing the picture. In fact, I'd probably add to this idea right there with another one. So, boom, it went 3 up, and I miss getting filled by a tick, so I just moved it down to 3. There we go. Okay, so we got 3 on that one. And you may need to go back and see this in the replay. But again, the purpose of doing the one tick drill is not getting a tick. You can get more. And it's not the ratio of your win to your loss. It's the idea of learning places where you're just overwhelmingly likely to get your tick. That's what you're teaching yourself by doing this one. Good question, Joseph. God, you guys are learning fast. You're one of the new ones. And I continue to be impressed by your questions. You're listening. And that, I can't tell you how encouraging that is, because what's happened in the past with a lot of new folks is they're so rigidly married to what they learned before that they can't open their brain up like I see you doing. So kudos. And the answer to your question, under normal conditions, yeah, that's why I have it set up that way. The 1 to 6 ratio works pretty good under just normal ebb and flow, which are normal back and forth conditions. And the reason it works is pretty simple, but it goes back to chart to dome. And, this isn't a chart to dome session, but everybody understands that's not in the boot camp, or at least most of you do. So let me bring up, where did that chart go? There it is. Okay, so let's put this back on ES, and I will answer that question a little more granularly. Okay, so you can see there's something I talk about frequently. When we're talking about ebb and flow, you'll hear me refer to what Peter Davies at Jigsaw calls the 8-tick dance. And this is a very common thing you see in the ES, where we'll get into a tight little range, and the top and bottom of the range will generally be about 8 ticks apart. And there's a really good reason for that. It has to do with the fact that retail traders tend to use 4-tick or 6-tick stops. And so the market just naturally goes and takes them out in both directions. That's just how things work. So if you go to any of those, just look for a place where that was going on like this. You'll find those numbers will normally work. And that's why I use them. But under this kind of crazy volatility we're getting a lot of these, big, giant, sudden moves one way or another, which often, just kind of end up going right back where we were, like this one right here that I'm showing as an example. It'll go and then right back up, and that's the technical term for what it's doing. So my point is just, yeah, you're absolutely right. But these aren't normal conditions. So I'm doing the one tick drill, but I'm using my high momentum ATM to manage it. So, there you go. Now, another thing, I have a few of these. I have one that's a 2-ticker, and, it basically is exactly what it sounds like. It just sets up a 2-tick and same stop. And again, I just adjust for conditions. There's times when you can just get 2 ticks easier. And this probably isn't one. I just got it. So, and see how it did that? It just did it at a burp. It just went, and it got me. That's why I use that term, that for the 1 tick drill, you know, that when it, you know, you want to be on the right side of the, and then when it the other way, that's typically a good sign to add to your trade. And, you know, I'm joking, but I'm not. I honestly don't have a better way to explain that than, I don't know how to spell it, Amy. Actually, as the TA, you are responsible for that. So anyway, it's funny, you know, it sounds like I'm just screwing around with that, but it's so true. That's literally what it looks like. Just watch it. You know, it'll get up here and then it'll go the other way and it'll do the same thing down. You know, and by the way, I'm trading the range here. That's the technique that I'm using. Whoops, don't want that. Let's do that. Maybe another one right there. Ooh, this is actually a good setup. Let's get that stop out of the way. Boom. Okay. See how those work? I got profitably taken out of my 2 tick target by a sweep. Looks like somebody filled maybe a 20 lot there. And it happened so fast you could barely see it. Hence, as the term, and that's just how it works. Okay. So anyway, that's the 1 tick drill. Questions? That's it. You nailed it. That's how you spell it. You know, and there's some guys sitting here right now who just joined us and they're like, I paid 49 bucks or 149 bucks plus a membership for this. I could call myself. All right, let's see. Questions. Kenneth asked me, do you concentrate most on the drills on ES just because the order flow is more robust? No, and that's such a good question. Yes. The easiest place to do the 1 tick drill, ask Amy, because I know she does it a lot, is in gold during the day because it's so quiet. And that's a good tip. You know, the 1 tick drill works the best in fairly quiet tapes. And so and again, the reason these are drills, Kenneth, is, you know, take the drill and go out to the instrument, and it's different. Every drill is different on every instrument. So did you see that? I literally just caught a 1 tick trade there on gold, and that was the easiest one of all the ones I've done. It was the most predictable. So go back and watch that replay there. But I'm not just randomly like looking at my domes and saying, oh, I'll put one there, I'll put one there. That's not what I'm doing here, guys. These are actually, you know, really obvious spots to me to play for these kind of 1 and 2 tick events, because the order flow is just that we just got another one there. It's just telegraphing it to me. And yeah, those are blanks, and yeah, it takes some time, but you will get there. I mean, even some of you new folks, you know, Osman and Joe and John, you know, you guys are telling me privately or publicly that you're starting to get this, and you've actually had some of your own blinks, and that's so cool. I just can't tell you how cool that is for me. So anyway, that's the 1 tick drill. Is this what Navinder is saying? I have no idea. I don't even know who that is, actually, Nate. Maybe I do and I don't recognize the name. Okay. So there are some other drills that are cool. If the market is really moving quickly in both directions, there's one that I like to do. Oh, I don't do anything with order flow savant that was blamed for the flash crash. Okay, whatever. Anyway, so there's another drill that I like, and there's countless drills. I'm just going to show you a few of them, but I'm looking at the question flow here, and I'm stopping because I'm seeing something. Okay. Somehow I need something to cling to decide where to take the trade. Yeah, Morris, that's a really good point. And it's exactly, that's because you're coming from training that teaches you that there's a signal and there's confirmation and there's a target and there's risk to reward ratios. And is Maria here? If you're here, Maria, cover your kids' ears. That stuff is all complete bullshit. It's total bullshit. It just doesn't work like that. So, you know, you got to unteach yourself that. It's about reading flow. And, you know, I can see some right now that's readable, you know, and again, the exercise of just kind of scanning your domes and looking for opportunities is a fun one. So I just got short here. And just because of the spread on YM, by getting filled, I made $30. I didn't even have to get a tick because all I had to do was get filled on the sell side. And because this spread is so wide, I automatically was profitable. And so that's another technique. But you got to be careful with that because, you know, you can also get very upside down when it's this thin. But that was a good example of that right there, and a fun one. Okay, so let me talk about some other drills, and I'll answer a few questions. And you know, the purpose today, I'm not going to just list, you know, a book of 40 drills you can do. I'm going to give you a couple of examples of drills and how they're useful. And then, you know, there's literally lists of drills all over the Furu Press. There's some really good ones on the Jigsaw page. Somebody posted a link to that. I believe it was Amy. I believe Anita posted a link to the crazy Australian guy with the price squawk thing. And he's a kook, but he has some good drills on his page. So I wouldn't discourage you from looking at those either. But you know, you can make your own drills too. Here's how the cut and reverse drill works for me, and there's a couple of different approaches to this one. This works only really well when we're moving. So I'm going to kind of exaggerate it here, maybe an NQ, but the idea of the cut and reverse is that you always have to be in the market. So you either have to be long or short all the time. So you're constantly having to evaluate which way you should be. And that's a really crazy drill to do. It's both my favorite and my least favorite. So let's try to do it with NQ. So again, remember, we have to be in the market all the time. So right now I'm going to start by being short. And if I cover my trade, I have to reverse it. Okay, I don't have to necessarily do it right away, but I have to do it fairly quickly. So, all right, here we go. We're going to take $50 profit on that, and now I have to go long. Okay, so that's how that works. And I like this because it forces you to really think about where you're going to make that call. I would have been better off staying short here and not taking profits. So the second you take profits, it's not only that you're taking profits, but you're committing to the market going the other way. And so this is one of my favorites from that point of view, and it worked. God, I look like a genius, but it's rare that that works for me because this is the drill I'm the worst at. And it works better when we're actually moving, but that's another fun one. And people do this drill differently than I do. That's the way I do cut and reverse. Okay, so you always have to be in the market one way or another, just with a one lot. And if you exit, you have to go the other way. I mean, you don't have to do it on the exact same trade, but you have to do it pretty much right away. And so you just saw an example. You can look at the replay there of how that worked both ways. That's rare, and that's why that's such a hard drill. You have to, it's the drill that teaches you who is on the other side of your trade. If you want to do the cut and reverse well, so let's say, for example, let's just look at the NQ tape. Okay, I'm going to play long here. So I'm long now. So if I'm thinking, okay, who's short? See, there's my trailing stop. And so, you know, that's what this drill teaches you to do. You know, and so, okay, I just took profit, so I have to go short, and that maybe actually isn't a bad idea. So, so anyway, this is how I do this, and I also do the cut and reverse with more than a one lot. Right now, I'm doing it with a one lot, but you can do this drill where you can add to your winners and losers if you want. And by the way, that's a really fun way to do the micros. Do the micros with the cut and reverse drill with multiple contracts. So the bottom line on that approach is you have to be in the market all the time. You can add to it, you know, give yourself a limit, like, you know, you can go 0 to 5 or, you know, whatever. And that's also a fun way to do it if you want to learn how to do the technique of trading around a core position by scalping in and out. So you can see right now I'm short here, and let's move those stops up. And this actually might end up working pretty well. I'm trying to add to my short up here, and maybe I'll throw another one on right now because it looks like it's going my way. And so the difference of this approach to the cut and reverse is you're allowed to take incremental profits, which allows you to spend more time in the drill. And again, so think about this. Let's flatten this out so I can make a point. So again, think about what's going on, the mechanics of that, either with a one lot or with, you know, scaling in and out. You're constantly forcing yourself to assess whether you're on the right side of the tape or not. Okay, so that's kind of what that one's about. So those are two of the ones I like. Let me show you where I was. I think it comes up pretty easily. Jigsaw drills, and if you need to tell it it's Jigsaw Trading, or it gives you like drills, real drills. Yeah, here it is, the one tick trading drills. So this is where Pete talks about it. He's got a little video, and I think there's a few other drills that he has here. Yeah, trading drills is that's the only one on there. Well, anyway, that's the one place. And the other place I was talking about, I think the site's called Price Squawk, I think is what he calls it. There it is. Yeah. Yeah, this guy right here, Graham Glover. And he has a bunch of different drills under this tab here. And I think you got to give him your email address to get them. But yeah, here's a bunch of them. Always in the market, flipping a coin, averaging in. And again, he has kind of different takes on them than I do. Everybody has different takes on drills. And that's fine. I mean, the idea, you can even invent your own. The idea is to, wow, look at this. We suddenly got volatile. Oh, which, you know, as we get close, look at that. See that, look at that energy right there. You know, that's why, let's switch that to footprint. This is one of the reasons the domes can be so much more. If you look at the NQ dome there, it looks like it's not readable, but if you throw a chart next to it, it gets a lot more readable. Look at this. We have a really nice HMOMO event up. So, you know, maybe we can get way off the trade and try to get long. You know, that's kind of the, oh, come on, fill me. Boom, we got filled. Okay, so we've got a one lot on here, and that's its entry. And so, you know, that's an example of, oh, there's a target for 250 bucks. Boom, we're filled. Okay, so now we have one left, and I'm going to try to get a stop. This is the entry. I'm going to try to get a stop in here. Okay, we got it. So this is profitable one lot based on that, and that's the trailing stop now. And so it looks like this is total chaos, but if you watch the footprint over here, it's actually trending in HMOMO really nice. And I have a one lot, what is this, a $500 winner over here now. I'm about to take profits, and it's moving so fast I can't even see it. But I know I'm between my entry, which is down here at 75. Right now, my stop's 86. It's trading 97, and see how it just keeps moving up on aggression. You know, this is an example of how you can just put a discretionary stop under this. You know, and we've got a $600 winner on a one lot in the NQ here. Now it's a $700 winner. You know, are you guys seeing this? Now it's an $800 winner. Boom. Okay, I just finally got flat. That was almost $1,000 winner on a one lot in NQ, going with H momentum. Starting with just the drill. I started that as a cut and reverse, and then I never reversed. So there you go. Okay, so that's how easy it is. Any questions? I couldn't have written that to happen if I wanted to. But that is exactly how it happens, Amy. And notice how, you know, the footprint was telling me the whole story. And if you were watching the dome over here, it just literally wasn't readable. But it was tradable and it was manageable, but you had to not use the dome for your frame of reference. Okay, I'm going to pause on that and for questions and comments, because it just doesn't get any better than that looking for examples. Yeah, Amy's absolutely right. Seriously, you know, that is exactly how it happens. And those of you that are saying, well, I'm not a scalper, I want to be a swing trader. Well, what do you call that? You know, 600 bucks on a one lot. I challenge you to do a better swing trade than that in, you know, whatever that was, you know, 3 minutes or 8 minutes or whatever amount of time. Yes, what Amy's saying is totally true. 90% of the time you just get your one or two ticks and you're good, and that's it. Again, Morris, you know, notice how I didn't even look to see what the news was. I don't care. What is going on is irrelevant, okay? And you'll hear me say this over and over again. And so these guys that subscribe to like real-time news feeds and whatnot, who cares? It's not about what's happening. It's about the market's reaction to it. And right now, that's pretty much just, you know, get long. I mean, that's all you have to do right now. Watch. I mean, literally, let's just get way away. We're doing the ES now, and I'm long here. And obviously, I'm going to add to it. You know, boy, it doesn't even want to come down there to let me add to it. There we go. Okay, so now we got a decent sized position and we can play a little bit. Need to get these stops way out of the way. Okay, and there's the one lot off profitably, and there's a two lot, and now we've got a trail on a one lot at 175, 275, 375, 475. Ah, this is exhausting. Okay, 875. Am I making my point? Gosh, I couldn't ask for better conditions. You know, that was like a $700 winner on a one lot. It wasn't one lot, excuse me. I scaled into that and I scaled out of it. It was a three lot. Okay, so I couldn't ask for better examples than we're getting right now. So trade the reaction to whatever is going on with respect to news or announcements or, you know, Trump sticking his foot in his mouth or whatever. You know, this stuff, you've got to learn as a trader that you don't care. And Morris, more importantly, that you don't care. You're not smart enough, and neither am I, to constantly game that. You just have to let it happen. Where do I see the profit during the trade? It's running over here on the left. Here, I'll put a short on so you can see it. See, this is the P&L right here. And so right now I'm obviously losing money because I'm short. I did that to demonstrate. And oh, actually, we just did a profitable short for Vortex. And again, why did I do that short instead of long? Because short's just a better game right now. Short, I will make money. This still may go up, but the energy's down now. And it has changed. And if you can't see that right here, then you're not looking. Remember what I was talking about? Oh, well, look at that strong move up. All you got to do is get long. Well, that's not true anymore. The energy has shifted. But as I was doing that, it was pretty clear, right? Now it's pretty aggressively choppy in both directions. This would be very hard to trade. But if I was trading this at this instant, I'd be long. And but it looks like it could be a trap. You know, this was a pretty substantial move up. I think you could probably make money scalping this long if you were willing to scale into it. And that's what's about to happen here. Let's get the stops out of the way so we can scale in big enough to make this work. All right, so you know what? This one's probably not going to work. That's how you do it. You know, when you see that, just get out of the way. And it worked after that. So you can't do, God, I should have stayed in that. I should have given it time to work. Nope. My intuition was I was wrong, and you just have to learn to trust it. And you know what? I don't know that would have worked out profitably anyway. I'm much happier that I got out with a small loss on that one. Because I mean, look at those other ones. You know, I was doing $800 one lots. So why get in there and get all aggressive to make $50 when you just made 800 being, really right. And this is a short now. I can see it. It's just going to be really hard to scale into it. So let's see if we can add to it up here. The energy of whatever that was is gone. So here, let's get all these way out of the way. And now we can show how this will work as a short. Okay. And we'll just let it start picking off our targets as it comes down. All righty. And it did it. Probably like another one up there. Give me a second here, guys. I'm just filling out my position. I'll explain what I'm doing in a minute. I'm trading on the assumption, which may be right or wrong, that this is a short-term top right here. That's just what it feels like in the order flow. So I'm going to go ahead and scale into a fairly good size short here, and that might be very wrong. And I do this sometimes, guys. I'll do a demonstration of something really wrong just to show it. And that's what I'm going to do here. We're going to keep adding to this. Right now we're short 9. I'm going to start adding 2s at a time. And the idea is showing you that, you can be wrong and scale can help you, but I want to show you how far you can go wrong before. Look at this right now. It's like $7,000, so that's why you have to learn to get the one lots right. It will just never work correctly unless you're good at that. Because like right now, you see the selling coming in here. What they're doing is they're pushing this ledge at the high. And this is a really cool spot to short, but unless you can do it with some pretty significant size, you're going to get crushed. And so you need to kind of go back and forth around, and this will just be a fun, like, huge size exercise. And this right here is a sim, just to be clear. It's a very good real one, but I'm not really risking this money. Okay, so let's put the stop up there. We got 19 of them. So our position is right here. And so, think about this. If you're a 50 or 100 lot trader, you could do this all day long. And then as it comes to you, you take profits. And as it goes the other way, you add to it. And you're really not taking extraordinary risk because your account is so big that it will ultimately work. And so, like, when I was doing the stuff on the leaderboard as a demonstration, this is what I was doing. And as long as you stay in your trade, it'll ultimately work, and your drawdown really isn't that big. So anyway, that's what I'm showing you guys here. And I'm not recommending you do what I'm doing here. This is an example of what not to do, just to be really clear, because a lot of you think, well, if I know that price is right, so I'm just going to keep shorting, and sooner or later my trade will work. I'm demonstrating to you why that's not true. Okay, so make sure you understand that watching this. So remember what I was saying, as long as this area holds, you've got a short. Well, that area is not holding, so you don't have a short. So, the proper way to manage this was to have been gone a long time ago. But now I'm showing you how even doing that, you will get slaughtered. And so now it's getting stopped out at like a loss of $30,000 or whatever. So that's a really good example of how, number one, you cannot choose a bias. You have to be nimble and be unbiased. Now the short's going to work, of course. So, I mean, that's just the way it is. See, and here we go. So we'll take profits on the short side. It may not. You know what? This could be unfinished business long here. It's you never know. Anyway, I'm just screwing around now. I'm not trying to demonstrate anything you should try. I'm literally just playing. And I do that too. So, you can do profitable trades. You can play. Again, that's about the balance. All right. I'm going to look at questions in a second. I want to go over 2 other drills that I find useful. And then we'll do what we need to. Oh, shoot. We only have 10 more minutes. We need to get to Ides of Monday. So you know what? Let's just pause here and look at questions and comments, and then we will see where we're at. Okay. Yeah, it does, Amy. The volatility makes it easy as long as you're on the right side. And what I just showed you is an example of not being on the right side. And what you really have to do is, as soon as you're wrong, get out of it. So let me show you how to do it correctly. Let's say I'm still thinking short. So let's put a short on. All right, well, this one happens to be profitable right away. So bad example of being wrong because I'm right on this one. So anyway, we've got a nice 2 lot. Okay, that one just filled. So let's try to find, all right, so being long here would be a mistake. So now I'm long and it's wrong. Okay, see how that's just going against me and it's teasing me, but it just won't go above my entry. Okay, that's the Lord's way of saying get flat, you're wrong. Okay, so that's a better example of how to do it. Although, if you look back in the workshop videos, I do like to show you occasional examples of how not to do it, because those are fun. Okay, let's see. Put up the LRC. All right, I will, but that's what it looks like. Why? Because it's range extension. Okay, I posted about this last night in the Slack. But if you want to understand what the LRCs do when it's moving that quickly, if you go here, this is in the bootcamp only at the moment, but you know what I'm going to do? It's for everybody. So let's just stick it here. Hang on one second, guys. So anyway, these 2 charts show examples of range holding and range not holding, what that looks like. And so for those of you in the boot camp, that's already in your Slack. And for those of you not, I'll just throw up these 2 here real quick. So now you can see examples. So that's what it, excuse me, I'm burping. That's what it looks like. Give me a second for this to come up. Okay, so this is what range extension looks like. It goes past the longer one. So basically what this is telling you mathematically is 96% chance. In other words, the short one is moving up so aggressively, it's almost vertical. And the second it touches The longer one, it just blew right through it. And that's because you're in a black swan. You're in a 3 standard deviation event, and it's extending the range. And likewise, when it's not doing that, it looks like this. And it will use that as a boundary, and it will reverse rather aggressively on it. So I hope that answered the question about the LRCs and how you can kind of see. Now you can see we're consolidating up here at the highs. So, you know, that would, if you're considering counter trend, that might be a place to look for it. Or, you know, maybe, you know, entering on a pullback might make some sense if you're thinking this move is going to continue. And who knows? Yeah, I'm not paying enough attention to the order flow to know. Right now, it looks like it's going to be a, you know, rape the shorts kind of a long thing. Yeah, and that's, I'm doing, you know, I'm doing like 4 tick winners here, and I'm literally getting them just one after the other because, you know, it's just blowing through the ledges and it's working. So, so that was 4 tick winners in a row. Picking up $50 bills. Oh wait, I'm doing 2 lots, picking up $100 bills. So there you go. You know, there's another one right there. Oh wow. That one went real hard. That one went, let's see, 40. That one went 8 ticks in one instant. So you see what it looks like over there, and you see what it's doing over here. You know, that is what you're trying to learn if, you know, if you're in the boot camp, or, you know, if you're past the boot camp and you're, you know, just practicing your skills. All right, guys, we're running right up hard against the Ides of Monday, and I want to make sure I cut this off and do that. So I'm going to stop, halt here, ask for questions. I'm also going to see if Lee has anything he wants to add. You're unmuted, Lee, and let me look at the questions and see. Okay, let's see. Volatility, put up the LRC, I did that. Joseph, when it was that quick, where did you see to scale in? No, it's not node and it's not number of trades. It's a blink, Joseph. And you know, I'm not being flippant saying that. I'm saying if you spend enough time looking at it and practicing, it will work the same way for you. But number one, you have to trust that process, and you have to trust the rest of us, you know, that we're not just selling $49 bullshit here, because we're not. It really works. You just have to practice. Okay, so your follow-up question, when it was that quick, where did I see to scale in? You know, again, it's a sense. The top of the low is Friday's session. Yep, that's also relevant, Osman. Yeah, it's so much about seat time, and it's not about you know, Amy makes a good point here. When you practice it, it builds up your own confidence. And and one other, you know, guideline for the 1 tick drill that most people use is you do it until the day is over, or you make $500, and you're like, what? You know, $12 at a time, $500, that'll take all day. I've done it in 30 minutes. You could do it right now, and, you know, pick them off. There's a 5 ticker. There's a 2 ticker. There's a, oh, that one might not work. We need to add to that one. Oh, there's a 2 ticker again. Didn't get a chance to add to it. Am I making my point? It literally is a skill that I have practiced, and Amy's practiced, and Darren's, all these guys have learned. And I'm literally just doing a skill here. This is not a mechanical thing, you know, where step 1, step 2, step 3. I am practicing the skill, and I learned that skill by, guess what? Practice. It's like anything. It's like motocross racing. It's like, you know, car racing. It's like building fancy furniture out of walnut. It's like art. It's like interior design. It's like anything poker, anything you can name where there is a combination of things you need to learn to just understand. Like in poker, you know, you need to know whose cards are more important than others. An ace, you know, beats a king, but ace is also the low and the high. You need to learn all the rules. That's the structure. In futures, that's learning what the bid and the ask is, and learning what, you know, a trade executing on the sell side means, and all that. And then once you have that down, you have to practice the art of what we are doing. And look at this, gosh. I mean, I just got 8 ticks on a 2 lot, and I just saw the entry and I took it. And, you know, it's not, the moral of the story here is not Jeff's a genius, you guys. I can hold my own. And yes, my IQ is a decent number, but it's practice. I can't tell you how fucking horrible I was at this when I first started trying to do trading on the dome in 2014. I mean, I was so miserable at it. I can't even tell you. I would go, you know, I would go 3 weeks with no winners, and I would just be, God, how could I be this bad, you know? But then I would take, you know, those 300 losers that I had just done in 2 weeks, and I would say, okay, what's wrong with all of them? And one of the things I found immediately, are you guys ready? Fixed stops. The losers all were losers because of fixed stops. If I had not used a fixed stop and used my one tick target, the 300 losers became, are you ready? Are you ready? Everybody, put your coffee down, listen. 293 winners from 300 losers by simply going back and looking at the trades and saying, what would have happened if I did not use that hard 6 tick or 7 tick stop? I hope you hear the moral of the story here. I hope you're hearing me. You know, fixed stops are designed to take retail traders out of good discretionary setups. We have a long right now, by the way. And it's a pretty aggressive one, so it's going to be hard to scale into properly, but we have. Okay, look at that. A 2-lot, I'm up $1,300. Always take profits, guys. Always take profits. All right. Questions, comments? I'm going to wrap this session up in 2 minutes. So ask them fast. All right. Steve, do I put a limit above to buy? That's part of the, it depends on which one I'm executing. I'm not sure what your question is, Steve. We'll have to take it in the next session. Okay, Amy, thank you for answering some of the questions. Okay, Joe, what you just said, please don't do those large scaling in examples. I want that in your mind. That's exactly why I did it. I want you to see how badly you can screw and fuck up if you try to scale into a loser and you don't know what the hell you're doing. I did that because I want that in your mind. Of course it was ugly, and that's why you do not want to you don't want to do this with real money, and you don't want to do it until you understand what you're doing. Okay? You have to learn to do this, and the way you learn to do this is by practice. And the only way you're going to burn your brain enough is to have some of those losers that just crush you. Now, in a sim, they don't crush you enough to make the point to your psyche. So what I would suggest you do is do that in the micros, and let's play in the micros with some real money, and you can see what that looks like. So here's the micros, and hang on a second. I need to switch data feeds to go to real money micros. So give me a second. I am actually doing that. Just hang on. Okay. I just switched my data feeds. Okay, and now I'm on the Motley Crue $1,000 scalping account. And I don't have a lot of time to do this though, because I need to do the other meeting. So here's what we're gonna do. Yes, thank you for time check. I'm gonna end this meeting right here. And I'm going to leave the micros loading there. And then when we come back for Ides of Monday, I'm going to do Ides of Monday. And if anybody wants to see the scaling in micro example and how you can teach yourself that, I will do it then if I can. But really, really want you to understand, Joseph, that you do that way because you have to teach yourself the catastrophe of being stupid and the catastrophe of having bias, because those things will kill you. All right, with that, we're ending this session. I will be back at 5:30 for Ides of Monday, and then after that, we'll talk a little bit about playing in the micros. Okay, we're done. I'll see you in a minute. Lee, do you have anything you want to throw in here real quick just before I do it?
Nothing from my side, Jeff.
Okay, cool. All right, we're out of here.